Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Jeff Kilburg, founder and CEO of KKM Financial. Jeff, it's great to see you as always. There's just so much to talk about this week, and we'll get to all of them, but I want to start with the non-farm payrolls this morning. What do you think the data, how could it have potentially impacted expectations for the Fed and in terms of its strategy as we look forward for the remainder of the year?
Well, Jill, I think what the equity markets are saying, as well as the interest rate markets, after this data point, because we had 263,000 new jobs, expectation of 250,000. What's interesting, the U.S. average hourly earnings, it was 4.98% year over year in September. That's the slowest growth since December of 2021. So you're talking about 18 consecutive months here of inflation outpacing wage growth. So what does that mean in layman's terms? It basically fortifies the path of the Fed to raise 75 basis points. So that's the reaction today. We're seeing the 2-year above 4.30. We saw the 10-year up at 3.88%. You're seeing the Nasdaq 100 down almost 4%, and you're seeing 2.5% of a drop in the S&P 500. So I think what this says that this is an overreaction. We're still about 100 handles higher in the S&P 500 from the low we put in last Friday. But what's interesting is that the market has become so sensitive to every Fed sneeze, cough, blink. And here, sure enough, the market is telling us that, yes, they're going to stay very, very stringent, very hawkish. I don't know if that's going to be the case. We have earnings seasons coming up, but we also have a lot of inflationary data coming up between now and that November meeting. So if we do see inflation abate, like I think it's going to in a very precipitous manner, I think that puts the position, we talk about the Fed pivot ad nauseum. Let's change that vernacular, Jill. Let's talk about the Fed pause. And if we do have inflation data abating and coming down, reversing trend, I think the Fed has the ability to pause, maybe go 50 basis points, maybe even go as dovish as just 25 basis points. That would be a significant turnaround and a significant V formation in equity markets.
So we had another big announcement this week. OPEC is going to make some cuts, and it seemed to have put the administration into somewhat of a frenzy here. And, the commodity complex just as well as anyone else. What do you think is going to happen from here?
Well, Jill, I don't get political, but this really got politicized quite quickly when you saw that exact cut or curb, you should say, to be the exact SPR level of the Biden administration. So yes, there's a lot of political components underlying, but we're seeing energy, seeing crude oil about 5% today. It's interesting. This theme of energy, it's been a theme of ours all year long in our sector rotation, our tactical rotation. And sure enough, you're seeing names like Occidental and Chevron and Exxon. Look at the ETF IYE. These are all names that continue to move higher inside of the markets where everything else is kind of moving lower. So I think we have to be very mindful of the potential intentional global slowdown by higher crude oil prices, because it's been really impactful. Yes, we've had less pain at the pump because we've had crude oil lower, but right now it seems like there's a bit of a geopolitical tension that's going to move crude higher, which should be another headwind into already moving higher interest rates, because interest rates, it's a 1-2 punch, Jill. So I do have concern about that. But bigger picture, the economy, the U.S. households, I think we're still in really good shape, but no one talks about that.
Right. I mean, you're trying to find some of the bright spots here, but moving along to another administration move, sweeping restrictions on selling semiconductors and chip making equipment to China. And we saw what that did to the semi space. And of course, you can see that reaction in the Nasdaq 100 as well.
And geopolitical tensions don't matter until they matter. And sure enough, you're seeing semiconductors really come down lower today. But I think this is all the price discovery. We've seen continued price discovery and sensitivity in information technology specific to semiconductors due to the higher move in interest rates. The interest rates, I don't think we can talk enough about interest rates just because the move in the 10-year note from 1.5% to 4%. So I think that maximum yield that we saw, even though the 2 years back above that 4.3 level, I think those come down and normalize between now and that November meeting. And that maybe puts a little bit of a bottom into the technology, because you're right, Jill. For the longest time, we've been really talking about shifting from growth to value. We started talking about that in late 2021. Now there's an opportunity to find some value in growth. I know that's counterintuitive.
Jeff, I want to go back to one bright spot that you had pointed out before, and that's spend, because you and I have been all over the place, all over the map at different conferences and so forth. And I can tell you, I was just in Vegas last weekend. I have never, ever, personally and professionally, have ever seen it as packed, with no hotel rooms available, no reservations available, and not just with people at the conferences, but regular people going to enjoy the weekend. Restaurants, even where I live in New Jersey, are completely packed. They cannot get enough people to work. And even though prices have increased, people are spending. I have not seen anecdotally a major slowdown, at least within that segment.
I agree. And I think to your point, Jill, we talked about this pent up demand coming in the wake of COVID, but it was really dislocated. We saw the different variants. We saw different, state and local laws about masks and all the pent up demand. So here we are trying to understand. And on top of it, let's look at China. China still had very stringent COVID laws up until just about a month ago. So measuring all that really is hard to understand. But the consumer, to your point, yes, does get excited. We're seeing crisscrossing the country myself. I do see a lot of construction. I do see a lot of spending. And it's interesting to see that there's no slowdown coming. We're about to embark upon the holidays. So I think people are going to continue to spend. But that 1-2 punch has to feel a little bit better because of the price of crude oil, the pain at the pump. Some of these inflationary components, lumber, copper, all the different things that were really bothersome spring, June, summer of 2022, those have come down. So of course, inflation is way too high where we're comfortable, but it is coming down. And I think it's going to come down faster. And I'm hoping that's representative in the data, as well as some of the earnings in the next couple of weeks.
All right, Jeff, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.